Bitcoin has broken upwards from a 10-day long horizontal consolidation, resulting in a move towards 44k. Will Bitcoin continue upwards, or is this move nothing more than a fake out? Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be taking a look at the short-term price action, discussing the next immediate moves for Bitcoin, going over the parallel channel, the recent breakup, the 44k resistance, whether or not this move is a fake out and will deviate back into the channel, or if Bitcoin could muster the strength to continue to 46 to 48k. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos on Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in our trading channel, you can join our VIP group. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You'll also get access to the group chats, the general chat, the trading chart and education chat, the news chat, a help chat, a daily video chat, and of course, guys, our trade setup chat. If you're interested in getting access to all of that, go ahead and contact me in the pinned comment of the free channel for more information. Let's go ahead and dive into the video. Now, one quick announcement before I do dive in. I am going to be on holiday for the next week, so my upload schedule is going to be slightly different. I'm expecting the same upload time, but I'll be doing far less videos, probably only 2 videos in the next week. So a quick heads up on that one. Starting on the market data, guys, let's go ahead and jump into it. So 24-hour volume is up a whopping 21%. That is sitting at a total of 131 billion. As for 24-hour liquidations, we are sitting up 29%, sitting at a total of 177 million there in liquidations. Moving over to the liquidations, we can see the majority of these liquidations came from short positions, with 75 million coming from long positions as Bitcoin broke upwards out of this parallel channel, this long-standing short-term resistance, resulting in, again, a rally towards, again, that range high trigger, as we've been discussing, exactly touching that at around 44.3k, which did end up liquidating a whole heap of shorts that were building up within this range, guys. Moving over to that volatility index, we aren't expecting too much of a change here on the 60, which we haven't seen, and on the 30, again, not all that much change, as the price action has only recently made a move out of this consolidation phase. If we do continue upwards, that is when we'd expect that volatility index to pick up. Moving over to the broader markets, the DXY is still testing an area of support at this bullish divergence around about the 102 to 102.5 range. Again, we have developed that bullish divergence a few days ago, and we are still trying to swing back control in favor of the bulls on the short term. If the DXY does continue upwards like it has been doing on the immediate short term, we could potentially see a pullback on the S&P 500 and of course on the Dow Jones. Again, the Dow Jones and S&P 500 have had an absolutely phenomenal few weeks, mainly in the fact that, of course, we've got the news that interest rates are likely going to pivot or at least reduce at some point next year. And inflation appears to be under control according to the data we have been given. Again, is that data correct? That's a whole nother story, but according to the data we've been given, it is under control. Looking at the overall DXY over here, we can see we have a short-term downtrending resistance developing. This, of course, is the downtrending resistance we need to break above for it to flip bullish on the short term, which will result in a continuation to retest this higher time frame diagonal resistance. Until then, we are very much in a downtrend. However, we are facing this period now in the downtrend where the bulls are starting to try regain control and the bears are losing strength. Moving over to the S&P 500, we can see with 1 day and 23 hours remaining on that weekly candle close, the S&P 500 has not managed to remain above that all-time high resistance as of right now. We have deviated actually above it, and we have currently sitting underneath the weekly high close, which was made on January 3rd, 2022. Again, guys, if we close a weekly underneath this level is going to still act as a resistance. If we are able to close a weekly above it, it will turn that resistance into a support. Moving on. Looking at the Dow Jones, guys, the Dow Jones is looking significantly better than the S&P 500 as it has closed that weekly candle above the resistance, turning this level into support. As of right now, even if we see a pullback into this range, it should be considered a bullish retracement because we would expect a retreat or a bounce from this level of support. Only if we lose this low at around 33,360 will we then expect the price action to actually come on back down and turn bearish once more. So overall, the markets are looking good. The Dow Jones is looking significantly better than the S&P. Let's go ahead, guys, and jump over into Bitcoin. Before we do, a quick word from Bitget and BingX. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, back over into Bitcoin. So let's discuss what is happening here and the likelihood of a continuation upward, whether or not this is a deviation, and how to plan and prepare for both scenarios so that you can actually make a move where you can actually execute your plan that you're going to be preparing based on what the price action does to capitalize on whatever occurs. So first and foremost, we have to go ahead and talk about the recent price action. So what we did see was, of course, a parallel channel. We broke on toward the upside. This level is now an area of support. So this was a prior resistance. This dotted line was a prior resistance. You can see if we drag it back, we had resistance once, we had resistance twice, we had support over here. So an area of confluence, a trigger point. This was our short-term downtrending bullish trigger. We broke above that level, and this level is now acting as a temporary support. So we have a temporary support over here, and of course we've got our range high resistance. Our range high resistance is represented by our solid black line. So we're moving between our temporary support, which is the upper level of resistance of the parallel channel, and the range high resistance, which is going to be the high point of the prior horizontal consolidation before we broke down and made this higher time frame 10-day long parallel consolidation. So we are moving between these 2 points. So very obviously, guys, the move upwards will continue if the range high trigger is broken. If the price action is able to clear this area of resistance, the area of now we have rejected from 3 times, the price action will likely continue upwards into the next area of high time frame resistance, which is going to be that 46. Let's go ahead and draw it on this chart. The 46 to 48k range. As you can see on this chart over here, it is reflected by this red box. So again, a break over the range high will significantly increase the likelihood as the range high will be turned to support, the price action will very much likely move into the 46 to 48k range. That is the bullish case scenario, guys. Let's go ahead and take a look at some of the indicators and then discuss the bearish scenario. So really quickly, starting off on these indicators, we'll start off on our momentum indicators, our market cipher B and RSI. If you don't know, these more or less tell you the same thing. That market cipher B does a better job at visualizing really what is happening to momentum. So it's a little bit easier to comprehend, hence why we've brought up both. So what we can see, guys, within this period, we do have the momentum moving upwards as an overall uptrend over here, reflected by the RSI. We can see in the short term, we had a nice positive momentum flip right over here, as the momentum, which is the blue wave, crossed over the 0 point on the histogram, moving into our positive territory, which again, if you look at when that occurred, that actually occurred just prior to that breakout on the white line. So you can see that facilitated the break up or the strength required to push the prices higher and retest that range high trigger. So overall, we do have positive momentum. We would expect, like we said in yesterday's video, the price action to continue towards the range high, provided the uptrend on the RSI is held. If at any point this trend line breaks, that would be the confirmation of a breakdown of the current parallel channel and a continuation lower. We'll come back to that point in just a moment. So overall, momentum is still looking solid on the 4-hour chart. On the 1-hour chart, we can see we are starting to see a small sign of exhaustion, again, with the market cipher B telling us we're experiencing a decent degree of exhaustion. This is basically showing us that we have strengthening positive momentum, and now we have weakening positive momentum. So weakening positive momentum is another term for essentially just exhaustion. So let's go ahead and draw our current short-term trend in. If we drag our trend line across, this is going to be our current short-term trend. As you can see, we can also map this point out on our RSI, which is going to be our respective low points. Taking this low over here, drag it across to this low over here, we can actually mark out that respective momentum trend here on our RSI. So we can say two things, guys. We are expecting the price action to remain above the parallel channel and remain bullish, because it is a bullish trend while it is above the parallel channel, okay? Provided two things remain intact. Number one, the short-term uptrend remains intact. And number two, the RSI does not break down from this short-term uptrending support level. If we do break down from this level, that would signify a negative momentum shift. If we do lose this uptrend on the short term, that would confirm deviation from the parallel channel and will likely push the price back down to the range low. So let's go ahead and zoom out a little bit to show you a little bit better. Go back to that 4-hour chart and more or less draw out exactly the same thing. Really quickly, we can see over here we are broken upwards. If we do see those two validations on the bearish side come out, which is again the loss of the short-term uptrending support line and the breakdown on the hourly RSI, we will likely see this mark out as deviation. We had again continuation, deviation from high, and a breakdown to the low side. This will be a massive rejection. The RSI would likely come all the way down to retest the uptrend, and as we know, the third retest is generally when we see shifts occur when it comes to momentum. So this would be the worst case scenario. So how could you capitalize on the bearish side? We talked about the bullish side. We've told you if we break above the range high, we would expect a continuation upwards. How could you capitalize on the bearish side scenario? So we have to go back down to that 1-hour chart. If we take a look and draw those respective lines back into the chart, we have our hourly uptrending support line. Perfect. We've got our hourly RSI trend line. Again, taking those respective lows, we look at the same lows. Again, RSI is a derivative of price action. We generally see the price pivot at the same time, just different depths of the price action mapped to the RSI, as the RSI is a reflection of momentum, not a reflection of what the price action actually is. So looking at this for the short scenario, we are looking for two things. Remember, when we look for positions. We look for 3 points of validation: momentum, volume, and direction. If we look for a short, we can take at least 2 of those to have a higher risk position, but probabilities are still in our favor. A breakdown of the trend line, which would result in 2 things. Number 1, confirmation of deviation, and number 2, a loss of the short-term trend that we've established from the range low of the parallel channel. And number 2, what we are looking for is going to be a breakdown on the RSI to signify that this correction, this breakdown of the trend, is likely not going to be a deviation. It is likely got the negative strength behind it to actually push us lower. What we would expect at that point would be, okay, we'll say it over here, we would expect the price action to reclaim the range low prior to breaking above the range high trigger. So you could look for a short towards a range low with a stop loss either above the trend line if you want to keep it tight, or above the range high trigger, flipping bullish if that trigger point does break. So those are the 2 scenarios, guys, we were talking about in the short term. That is how we see the short-term charts playing out. Let's zoom out our thinking a little bit more. If we look at the parallel channel for what it is, like we said, we have broken above. However, since we are sitting right above this resistance, this is the key point we need to break above now. So as we said, we had a parallel channel. The price action, of course, the measured move indicates we could go higher. However, measured moves take us to the next closest level of support or resistance, which was reached. So this level here is the major point of resistance now that will validate a continuation upwards, not this level. This level is now just a temporary support. So if we break above the range high, I expect a continuation upwards. If we deviate under the trend line, like we said, we expect a continuation to the low. Now, what we do on one side, we generally see mimic on the other side. So since we have deviated above, that would tell us the bulls have tried to push the price upwards. However, they did not have the strength required to continue upwards. The bears stepped in, the aggression of the selling pressure increased, and the price action crashed back down to that range low. That would require, or should I say, that would have enough negative pressure to push the price downwards from that channel to retest that uptrending support line. Those are the 2 short-term scenarios, guys. I hope you enjoyed today's video. If you got any questions, leave them down below. That is really what we are looking out for. And I'll say one more thing, guys. If we're looking at the CVD really quickly, like we said in yesterday's video, the CVD is not looking particularly amazing. So this breakout looks good on the short term. It reached its target. This is what we have to be very aware of. The breakout reached its target. The breakout of this parallel channel was never 46K, 48K. The measured move said it could do, but as we know, when it comes to measured moves, it takes us to the nearest level of resistance or support, depending on whether it's a long or a short, and that was achieved. So for the next leg upwards, we need to break over the range high now. According to the CVD, we are actually looking relatively weak in comparison to where the price action is, which could result in, again, that short scenario playing out. Anyway, thanks for watching, guys. I'm going to be away for a couple of days. Again, like I said at the start of the video, I'm going on holiday for about a week, going interstate. If you're interested in keeping up to date with all of my posts, your best place for that is on Telegram. I'll be posting in there on the daily when I won't be able to do videos, and I'll be back at it when I come back on the 29th, I think, 29th of December. Thanks for watching, guys, and I'll catch you guys in the next one. Be sure to check out the Crypto Academy courses, a 10-unit course to teach you guys how to trade, teach you everything you know about cryptocurrency when it comes to technical analysis, structural analysis, market pattern analysis, and again, risk analysis. And I'll catch you guys later. Cheers.